I want to bring in our next guest to have a look at the durable goods orders and the market reaction to it. Today, joining us from the floor of the CME Group, we've got Scott Bauer. He's the CEO of Prosper Trading Academy. Scott, thanks for coming on this morning and giving us part of your day. I want to get right into the energies, but first, I want to take a look at the durable goods orders and the reaction that we're seeing this morning. Talk to me about, looks like 2.7% for the new orders, well above estimates. We're talking 0.8% is what they were looking for. Obviously, well above that miss that we had last month. Ex-trans, though, only up by 0.4. And if you take a look at the core capital goods, we're talking 1.3%. You know, right before the break, Scott, I took a look at the indices, and surprisingly, I thought we would see a little bit more of a reaction to this. Right now, for the most part, they seem to be kind of limited here. Not much reaction at all.
Yeah, you and me both, and I'm actually looking down on the traders right now. I would have thought there would have been also, but when you look at both of these numbers, both durable goods and the jobless claims here, they're kind of offsetting one another, in my opinion. One of them is pretty hot, the durable goods number, much better than expected. The other one, it was a higher number of jobless claims, 230 versus 200. So I think the market is digesting that. But what's interesting to me, and maybe this is going to be a pattern now that we're going to see over the next coming weeks, we've talked about these Goldilocks economic numbers for the last month, 2 months. Really, we haven't seen an outlier number since the big jobs miss back in February. These two numbers that just came out, these are pretty big misses. And I'm not saying that they're misses necessarily in a bad thing, but just misses from expectations. Maybe the market is going to get set to start seeing some outlier numbers here, add a little volatility. And you know what? At the end of the day, we keep getting numbers like this, especially a hot number like this durable goods number. That actually could put some pressure on the Fed moving forward to think about ticking rates up, Ben, later in the year.
Yeah, Scott, you mentioned volatility. We were just talking about that this morning in the newsroom. I mean, if we were to see numbers like this that continue to come in hot, I mean, ultimately, that could really throw a monkey wrench into this whole situation that we've been seeing, because that would really shift the perspective, the speculation, and really put a lot of people kind of on the wrong side of the line here.
I agree, and you know what? This market needs some volatility to actually calm things down. I know that sounds really odd, right? Because we talk about lack of volatility in a, real quiet market, but what I think we need is some added volatility here to get some gyrations, to shake out this big rally that we've had and get back to some normalcy.
All right, Scott, let's shift on over to the energy markets, which the past few weeks have been on fire. I mean, it's kind of crazy when you think about it. Crude's rallying with the dollar on highs, global demand concerns increasing. I'd imagine this speaks to the concerns associated with geopolitical tensions that have been created recently, specifically the U.S. sanctions on Iran and how we're not going to grant any more waivers.
No doubt about it. That has absolutely provided some tailwinds for the marketplace here. Nonetheless, you have to still look at what we're producing here, and you have to look at the enormous production we're getting here. And at some point, that is going to counterbalance what we're seeing on some of these, cutbacks coming out of OPEC, coming from the Iran sanctions coming off. Now, that being said, Saudi has said, yes, we're going to make up that gap coming from the Iran, sanctions coming off. Not so fast, though, and I think that's what the market is really looking at, saying, we don't know how much they're really going to make up that gap.
Yeah, the market's concerned about that. They also seem to be a little bit focused on some of the stimulus measures on behalf of China and potentially lower rate environment here in the U.S. I'd imagine that's not hurting things either.
No, it's really not. And now to throw a big wrench into the whole mix here, Ben, you look at the news coming out of Japan overnight and economically not very good here. They're holding things steady here. Pretty dismal report. At some point, I know we're going to talk about the dollar briefly. At some point, something has got to break here, because the world just cannot keep counting on the U.S. dollar as just the leader. Yes, it is the biggest currency out there. It is the benchmark. But, man, if it's just the U.S. firing on all cylinders, or at a minimum, the economic conditions here are okay, while the rest of the world is pretty much in a retraction or dismal, something's got to break.
Yeah, speaking of something's got to break, Scott, one more question, then we'll let you get out of here. I talked to Stephanie briefly about this earlier this morning. I'm wondering how much of this move on behalf of the Trump administration, the White House, is actually to kind of remedy some of the trade issues that we're having with China. They're one of the largest importers of Iranian oil, along with India. I'd imagine if we don't give them waivers, that could really shift some of the trade dynamics as they be forced to purchase more oil from the U.S.
Yeah, no doubt about it. And you look at how much China imported from Iran just last month.
Yeah.
And I think it was almost at a record pace. And that was probably just to get ahead of the game, ahead of these sanctions coming, coming off here. But you're no question about it. I mean, this is something the Trump administration, I think, has on the table with them, knowing that, you know what, they're going to start coming to the U.S.
Yeah, well, much like we talked about how we could see a shift in terms of the rate speculation and sentiment there, it would be interesting if we started to see that shift in terms of some of the demand coming in for more for WTI than the Brent.
Yep.
Maybe it would narrow that spread down some, which has been widening. Scott, really appreciate you joining us here with a look at the energies and helping us break down and interpret some of those numbers that just came out. Traders, that's Scott Bauer. He's the CEO of Prosper Trading Academy.